For more on the FTX collapse, as well as today's hearing, former CFTC Chairman Timothy Massa joins us. Timothy, great to have you with us.
Thank you for having me. It's good to be here.
We could sit here and point a lot of fingers, I guess, at a lot of different regulatory agencies, but I'm wondering what do you think is the root cause of the lack of oversight over this particular implosion?
Well, actually, we can't really point fingers at regulators because at least our U.S. regulators don't have jurisdiction over FTX. Well, let me put it this way. Because crypto exchanges claim they are not trading securities, they have not registered as a securities exchange. And insofar as they claim they are trading commodities, no federal regulator has authority over the spot market. And I think, the same problem exists abroad. Obviously, the main FTX entity was abroad. But people have to realize exchanges in the U.S., I think, face a lot of the same issues because they do not follow the standards that we have in our securities and derivatives markets, except to the extent they decide to do some of that voluntarily, right? They claim to be regulated, but they're really referring to licenses under state money service business laws, which date back to the telegraph era and which are woefully inadequate to regulating these institutions. So people who want to buy and sell crypto have to understand the risk is not just the asset you're buying, it's the platform on which you're buying it.
It is amazing, Timothy, when you have a conversation about crypto and regulation and just regulation of securities in general, that a lot of laws were drawn up decades ago in a totally different time from where we are operating right now. When I was talking to the former CEO of the NASDAQ, Richard Greifeld, he was saying that he thought that it was very clear that crypto was securities, and he cited a 1940s law, the Howey Act. I mean,
right.
It's
the Howey
just
test, yes.
The Howey test. And it's just stunning to me that we're drawing on these things from decades ago to regulate or to try and find a regulatory framework for these new assets of the future. Where do you stand on whether or not it's a security? If we said it's a security tomorrow, does that enable regulatory agencies, the appropriate ones, to come in and make this space safer for investors?
Well, here's the problem. You have to make that determination token by token. And, I tend to think a lot of these are securities, but the SEC would have to prove that in court unless an exchange says, oh, yes, you're right, they are securities. What we have are exchanges who basically say, or I shouldn't even call them exchanges, they're really trading venues because exchanges really mean things that are registered and comply with the law. These trading venues say, well, we don't think they're securities, so we're not going to register. We're not going to comply. It's not so much that the laws are, out of date. Sure, they maybe need a little refinement in terms of disclosure obligations and other things to deal with this new technology. But the basic problem is that we've been bogged down in this issue of, is it a security? Is it a commodity? The crypto trading venues have taken advantage of that and not registered. And therefore, we have a situation where they're not abiding by these rules. I mean, I wrote a paper about this 4 years ago, outlining this problem before FTX was even created. So, we haven't changed it. We really need to fix it.
Yeah. Which regulatory agency, if you were asked by Congress, which regulatory agency has the biggest deficit when it comes to the ability to regulate?
Either one could do a good job. This is what I said in my paper several years ago, as long as they're given the resources to do it. The other thing we could do, I've written another paper with Professor Hal Jackson at Harvard, where I've suggested the SEC and the CFTC should just get together and create what we call a self-regulatory organization. It's not self-regulatory in the sense that things are left up to the industry, but basically you would use that to create some common standards. You would say, we want these trading venues to follow these standards regardless of whether it's a security, a commodity, or something else. And, if you do that, we won't shut you down while we sort out this issue of what's a security and what's a commodity, but that at least could bring some standards to these platforms faster.
Until then, and I don't know when that, we'll find some sort of resolution, but until then, do you think customers who are using these trading venues, as you say, are their assets safe?
Hard to know. We don't really know what the procedures are. I mean, look, people have to realize, people think, well, gee, I'm on the blockchain, you can always see what you have. When you buy and sell on one of these exchanges, you're not even on the blockchain. You're just in a ledger account. You don't even know for sure that the exchange has enough crypto to to satisfy all the customer liabilities, and that's what we saw with FTX. Now they're supposed to have it. They're supposed to make sure they're protecting that, even under these modest, very, very modest and weak state laws. But no, I would say there's no assurance of that. And again, if they were to fail, you're not protected. In our securities markets, if your broker dealer fails, you're protected under a federal program. In the commodities markets, if we have a failure, you're also protected by special provisions in the bankruptcy law. We don't have that for crypto.
Right. Timothy, great to get your analysis. Thank you.
Thank you.
Timothy Massad. And what we're seeing as a result of all of this is a crisis of confidence across the industry. There's a real concern that there could be some forms of runs on banks with other coins, with other stable coins, because people are questioning whether or not those coins were somehow lent out in some way. Somebody else might have some kind of claim on them. Do they really exist for them to be withdrawn? I mean, Karen, you've been an investor in crypto. Does this shake your confidence?
Well, it has to, right? It has to. And I think it also has to put off a lot of the sort of the big themes that crypto was based, had rallied on. Partially that was institutional adoption, right? So that's kind of out the window right now. And I think that, it's Lehman-esque. So we saw what Lehman did for this industry. So we saw what that did to the entire banking industry. I've continued to be sort of surprised that Bitcoin itself is not lower, given the cataclysm that has happened in the space. And I think there was thousands of coins that will never be anything, that were ridiculously something. We saw Dogecoin on the day before Elon went on Saturday Night Live. I haven't looked at Dogecoin lately. I don't really know where it is. So anyway, it's not a huge bet for me, but I am just hanging out kind of to see what happens.
Yeah.
I think Bitcoin's traded like a champ. It's partly explained by physical storage. I mean, cold storage. And partly explained by the very strong retail hands that are not always strong hands. But I think you have a case where the institutional adoption of Bitcoin is very late in the game, if you think about who's holding it and you think about the supply. And there are some important technical levels that at least it's respected so far.